The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Good to be back in the saddle again and with the sound working well. Here we are looking at a Dow that was down almost 100 points. It's up 56 points at 18,229. S&P's up 230 at 2145. The comp index is up. No, Compex is down 4 at 5279. VIX index was in the 14s. It's down to 13.80s. Made a big deal about that this morning. Now, this is going to be important. The E-mini is up at $2 at $21.40. You see these patterns that we've been talking about for so long, the arch formation. Well, within the context of the arch formation, there has been buying on every one of the dips and selling on all the rallies. That's the characteristic here. This morning, after that selling wore out, there was a little pop-up. It looked like that was it. No. They had a retest, and that was the scary part. But that was the part, of course, that if anyone was intraday trading, it was a very nice time to buy. And now look at this massive move to the upside. This really is a big move from the 21.26 low this morning to 21.40. That is a 15. Wow, that's a 15-point rally. And the Dow's even better than that. Look what we've got. We've got a potential to try to test this trend line right here at 21.58. I'm not sure it's going to break yet. Now, the reason why this is all very, very exciting and why my contention has been that the market's making these arch formations. Let's just go through this here. Look right here. I drew it in ages ago. Arch formations that keep coming down towards the lows in the low 18,000 level, and then they rally. And one of the aspects about this is that it's really a rectangle formation, and rectangle formations, as I always say, can last a lot longer than patience or your money, so you've just got to be real careful. And what's really important about this, going to the daily chart right here, is that you can see I drew this potential for a cup formation right there. We almost broke it this morning, but we've come back into that, and that's very positive. And we've gone through the red line, which is the 200-period exponential moving, the 20-period exponential moving average is the 120-minute chart. And now we're going to go right back into the sell zone. Will it be repelled there or won't it? That's going to be the big question. There's the election right there. Now, I've got a webinar coming up. This webinar is coming up on let me find it right here. Of course, tonight you've got Larry Pesavento. It should be a fantastic webinar. Always does just fabulous webinars with his wealth of knowledge. And then a week's time, at 6 o'clock in the evening Eastern, I'll be doing one. And it's really a question of, after the election, are the markets still a buy? In other words, we've held so well up until now. Let me go back to this chart here because I want to show you something. This is the daily. Let's just get out of this daily now. What I want to show you is how we've, this is a 120-minute chart. Oh, I need to do this. I'm going to the 120-minute chart. Hold on. I just need to show this because I always do this before the show, and then in the show I forget. That is the 120-minute chart. Look at that left side, right side price time match to the high that was made. Not the price, but the time to the high that was made at 250 this morning at 21.35. Then it tumbled down to a low of the E-mini, 21.26.25. Tried to rally, it went to a peak D in the 10-minute chart. Then it plunged. It really did. It plunged right through and went down to the low that I mentioned earlier on of 21.24.75. And now it's gone to a leg C in the 10-minute chart. It should make a D after going through all this effort, and it's done in a much shorter price time. Look at this price time match right there. Bam. It went through in one bar earlier. Now I can go back and I can discuss. So the parameters to watch on the E-mini are 21.35 to 21.33. That should be a containment area on any pullback. It might happen after a peak D or before a peak D, whatever it is. That 21.35 actually is the 9-period moving average on the 5-minute chart, so we were watching that. Most importantly, This is typical action that we can find in a rectangle, and that's the reason why we lifted up the shorts of the Dow. I don't want to be bothered now. It's in a trading range. It's making this bouncy yo-yo pattern in a very narrow range. It feels big when you're in it, but actually historically this is just nothing that we're in. And this can go on just a little while later until the market gets a sense of something. I'll talk about that sense of something in a moment. I want to get rid of this, and I need to go through the numbers. Here we go. And thank you to our wonderful hosts earlier on. Just fabulous programming here at TFNN. Hope that you were able to listen to the show, starting off with John Logan. And then, of course, you got Larry Pesavento with his workshop coming up tonight. Don't forget that. Should be just terrific. This is part of the missing link he's going to be talking about. And then, of course, Tom O'Brien and Tommy, fabulous show. I hope I can do my best here and give you something of pertinence to the market. And then, of course, we've got noon. We've got your swim lesson. After your swim lesson, what do you have? You have Steve Rhodes. You have Dave White. Then back to Tom O'Brien. And then later on this afternoon, you'll get, so Wednesday. Yep, that'll be it. Tom O'Brien, and then you get Larry's workshop. Now, let's just go to this. The E-mini, we're done. Now, I want to show you something very important in the Dow. I'm going to be discussing this, that we've used time for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 14 weeks. We've been consolidating from 18,688, gone down to 17,959, and haven't broken it. And that to me is really important. Why? Because within the context of markets, if you use time rather than price, it means that there's some base that could be forming from which you could use a springboard to move to the upside. Now, the patterns we look at, and I need to do this very quickly because I want to finish all the numbers, is that this is forming more like a cup formation than the arch formation. So let's just leave it at this, that a Dow at 18,410 is really good action, and a Dow below 17,959 is very poor action. Just keep it as simple as possible. The VIX pulling back into the 13s is good. In the 12s is really good. So I think it'll sort of stay in the 13s for now. Let's move on because the monthly charts, I'm going to be talking about these monthly charts. They are imperative to watch. So far, I've got buy modes in almost all the indices in the monthly charts, and that buy mode says we've held beautifully just from a peak C in the Dow. You know, in the Chapman Wave, we look for 4 higher peaks going to a peak D. That's where other things can happen. It could go higher. That's where you could get your deepest pullback, and that's what we watch for. I look for things like hat-trick tops where the daily is given a sell signal, the weekly is given a sell signal, and now we're only waiting for the monthly sell signal to, monthly sell signal, let me show you one that we happen to be in. This is Edwards Life Sciences, one of the most fantastic stocks on the market. It has just been stupendous, going from below 30, from about the 30 area to 121.75. So I counted this. There was a chance for an instant restart, but everything about it said, this is the technique that you use, mister. You've been studying it for long enough. They could give you a peak G. Well, it's only a leg G. So now we have to go to the weekly chart. And what I was saying to subscribers is that we're going to short. We've shorted a couple of times, and now we're still short from the 121 something area, and the high was 121.75. And now what we're looking at is a stock that's at 99. It hit 95 this morning. It just plummeted. Why? Peak E in the weekly, peak F in the daily. That was the hat-trick top that we were looking for. I believe this could be a much longer term sell mode. Edwards Life Sciences. It's a pity because it's a tissue, heart valves, and related repair products. What can I say? It's just got away from itself. This is a very poor action, right? I'll be right back. Basil Chapman, Tiger Technicians Hour. Yes, that.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So we're looking at this E-minute, the 10 minutes of the E-mini, and it's at a peak C. And if this bar doesn't make a new recovery high or retest it, that will making a leg C. It will be a peak C. My thinking is it could pop one more time, and then a chunk of the work will be done, and then perhaps it'll be this afternoon we get the real test to see if there's going to be follow through to the upside or not. So let's go on. Now, I don't want to make it sound like this is just one of those brilliant moves with EW. There were moves that I was hoping that it would work out. We took really small losses. In one case, a 1% loss. In another case, it was a 1.2, 1 point something like that. And then they moved against us. But thank goodness for stops. And that's the reason why I do have tight stops, because when we time it, you remember Alta Salon? Oops, where did it go? Alta Salon. Sometimes we have to try things 2 times, maybe 3 times. Well, we got it that time. And we got that big move down when we shorted the high all-time high of Ulta was 278. The next day, we got shorted at 270, and it plunged down to 234. And then suddenly there was this, who knows, it was such a fake out short covering rally that we got out at 255 for a 15-point gain, but actually we had something like a 36-point gain earlier. And then I was trying to reshort because I said that was a peak D and it could pull back. Doesn't always work, but that's what we try to do. And in the Chapman Wave methodology, one of the reasons why it's going to be so fascinating looking at these monthly charts is that we do try as much as possible to. They always say you don't ring a bell at the top. Well, you do. Oh, I haven't sung this song for so long. You know, I have a song called, let's say, Carl, not on the phone, but listening. Oh, obviously, nobody wants to hear the song. We will get to the song because I think it's so important. But I'll tell you what we'll do. We'll go, Carl wants to know, I have 2 questions about X, U.S. Steel. First, the question was, is that a brand new move to the upside, or is this a continuation pattern? That was number 1. And then Kyle, who asked that? I had that from, I thought I made a, give me 1 second. I need to look to see. X. Well, I'll find it. I'm sorry. Silence on a in this medium is not very good. I'll try to gain a question. Oh, Sean. So Sean also asked. Sean said, was the 21st a new A or is it E? Okay, great question. So U.S. Steel trading at $19.80, up 33 cents. At this particular point, I'm going to call it a peak E. But if it closes above, it's at 1980. If it closes anywhere close to 20, I'm just going to call this, I'm going to put it in as an E/B. And there are a couple of reasons why. The first is that the MACD is still rallying and the histogram is little vertical bars are still good. And the stochastic's at 79%, but it is flattening out. Remember, I want a flat stochastic above 80%. It's not there by 27 cents, 28 cents, but it's almost there, and it's flattening out. And that to me says it's internal strength. I like that. Number two is it had a very big spike, had all the characteristics of a D, but it was a peak C from the low that was made in September. And then it pulls back, doesn't take out the low, but it goes really close. And the low was at about $15 and what was that, 60 cents, $15 and 72 cents, and then it pulls back to $16.17. Starts another move to the upside as the MACD flattens out and then expands. So I'm looking at this and I'm saying, okay, if you're long, stay long. I don't see any reason at this point because it's one of those participants in the market that's acting well in a backdrop that says, hey, very mixed market at this particular point. That's number two. Number three is that within the context of the weekly chart, it's not great because we have to wait for Friday. It's another 2.5 days to go, but it is improving with the MACD trying to turn up, not cross positive, but turning up, and the stochastic coming off under 20% to just over 20%. And the monthly chart says, hey, I'm holding nicely on the 9-period moving average. I'm making slightly higher highs than last month, so I'm okay. And that's all I'm saying, that I would have two stops. If you have a position that you were lucky enough to get in below 17 or 17.20 or something, then all I'm going to say is one part of it maybe is have a stop at about $19.30. What was the low today? $19.36. So 1932, somewhere around 1932, I'd have a stop in some part of my position, which I'm thinking that I would like to put back if it holds in the 1895, the 9-period moving average, to 1865. That area. If we can hold it and start another rally, I'd like to put that money back. But in the meantime, if you don't have anything, I'm going to just advise right at this moment, risk reward, I would just have patience and try to wait for a test of the low 19s, and then you can start a small position. So I hope I've answered both questions. Now, here's the next thing about it. I always like to go to the 120-minute chart because it's telling me about other things. And it says that it just made a peak D in the 120-minute chart. Now, what's really important about these Ds in U.S. Steel, I've looked at them before, if they pull back just gently, you can go even higher. I'm putting a plus sign now, but if this goes to $19.70 later in the day, I'm going to have to put a down arrow. And that's suggesting that the 120-minute chart is telling us we can pull back a little further. It doesn't say how much. It just says the technicals are poor. Price is holding quite well, but if price starts to follow the technicals, be careful. If the technicals are following the price, that's even better. So that's all I'm saying. That I would have a little patience to get in. We've got Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
I'm very well, thank you.
Great. Do you show a
C?
A peak E in the a peak D in the daily on the dollar, as well as a leg D in the weekly?
I've got an alternate count. I meant to put this in the other day. This is on the UUP. I've got an alternate count of G/C. The characteristic of it is saying that it's probably more a G, but let me go to the dollar because I need to look at the root, which is the dollar itself, and this is the one that has gone to a D. So dollar is making a potential D with the MACD still good. and the stochastic still at 92%, but turning down. Both are turning down, but they haven't crossed negative yet. Leg D in the weekly chart. Now, does your question pertain to a position or kind of a market overview, or what? Do you have the?
Yeah, I mean, the dollar just seems to influence so much of what you trade. So I'm just trying to get a pulse on the dollar to potentially put some trades in. I'm looking at this. I didn't realize the weekly was in a leg D, and it could have some room for coming down a little bit more.
Well, there are a couple of things. Actually, you know what? If you've got a moment, we're about to go to a break. I want to start a little bit of a preamble here about the dollar. Can you hold on, and even though we're going to go to a break?
Yeah, I can, Basil.
Oh,
yep.
You can. Okay, so what I want you to talk about, folks, is these are the things that I'm going to be talking in great deal about in my webinar coming up a week from tonight. And one of the reasons is these patterns don't usually fail just arbitrarily. There has to be reasons behind it. And if you're looking at the monthly chart, I drew this in this little double U formation, 2 cups next to one another. If you're looking at the week and the monthly chart, it's at a peak C at 100.51, just barely above the previous peak B. We've used up almost the same time, a little bit more in months, but we've got the same pattern. And so far, everything looks like it wants to make a leg D. So let me talk to that issue when we get back. We've got Ben in Tallahassee. I think it's worth looking at, and as Ben says, it influences a lot. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Let me just... Let me just show this here because it's so important to what we're talking about. And I'm going to go to chapter 17 in my CD, Introducing the Chapman Wave Methodology. Yep, there it is. This is the pattern that we're talking about. It is this upside down pattern. Right, let me see, is this one? Yep, this one right here. The dreaded H pattern can turn into an M-shaped formation as seen in this chart of SHLD, Sears Holdings. Oh, we're back at 115 again. Well, that's that. So now we're looking at this, and this, if you look at the dollar, look at this one here, and now look at the dollar, and you'll see what it is, upside down. It's the same thing. The lowercase h has gone to an M formation. And those are powerful patterns, number one. Number two is when currencies form a particular bias, that means whether they form the bias of just going sideways, or form a bias of a single leg A up, or a sharp move to the upside, or a sharp move to the downside. Those patterns tend to stay for a long time because these are governments. This is not just mutual funds or hedge funds. These are governments putting to work massive amounts of money. So here we are. So what we're looking at is, yes, it's a peak D. It's holding very well. The MACD is good in the daily. The weekly chart we saw was going to a leg D. Let me just move this away. And it's a little late in its time price, Chapman Wave, left side, right side price time match. However, within the context of what we're looking at, the MACD is still very strong. Stochastics at 85%. Now, here's the big deal. That within the monthly chart, and I was talking to someone just recently about this, follow this pattern. I don't know if, Ben, you can see this live, but I'm showing the pattern I was looking at in a certain way was so big. Now look at. I love when you're looking at concepts, and concepts are, we look at fractals, and fractals could be patterns that are, doesn't matter what size, they're the same shape. And in this particular instance, here's the shape, and now all of a sudden, look at this. When I squeeze, look what happened. It just becomes like a little cup and a double handle. So this is a very powerful pattern, even though it looks so tiny over there. Why? Because it could eventually become a midpoint. This could become a propeller shaft to move to the 110 area, number one. Number two, if it had to break down now, it's got tremendous support. It's at 98.54. It's got support at 96.41, the 9-period moving average. And then that pattern of going sideways could continue longer. But if it takes out 96.41, it's going to retest the low, and that low is going to be very important. That'll be the most important low.
Yeah, I was going to say, Basil, that right. What you just said is really my million-dollar question. Do you think there's a short-term lower price in the dollar over the next few days or week, or what are your thoughts?
If we're talking a few days, I'd say, yeah, the dollar could pull back a little bit. I see no problem with it pulling back. It's had a spectacular move. If you're talking about weeks or months, until it shows the propensity to fail on any pullback and not rebound to make higher highs, I have to tell you that at this particular point, the way the weekly chart, the strength of the weekly chart is suggesting to me that 100.51 is going to be taken out for leg D, and it could happen sooner than many people think. But there is a trend line. That's really what I want you to talk about. If you're looking at the chart, this pink trend line, which really establishes, it's like a fulcrum. It's as if you've got, what do you call those things? You're on the barbecue, and it's on the spit, and you're holding the spit up, and you've got all the part of it is on the bottom, and part of it is the top, and we've got very little at the top. And my suspicion is it's going to make a little bit more action towards the top part of the pink line. So I love what I'm looking at now in the dollar. I'm going to quickly go to the EUR USD to show you the euro. Has the same pattern but inverse, and that's the pattern that I just showed you now in my CD. There's that pattern that says these arch formations, and here's the pattern again. If I show you something, all we want to do is say, what do patterns tend to do? And patterns tend to repeat. And if I go to this one right here, this is the 120-minute chart, not the right one. It's this one right there, right there. Look at that. That arch formation, the 120-minute chart, has just continued and continued and continued since the 14th of September. That's a month of 120-minute charts. So, yeah, I'm inclined to say I think the dollar is going to continue higher. I think the euro is going to come down. And at the same time, what I'm looking at is this is a pattern in the euro that says that the low, it hasn't taken out the low of February of March of 2015 at 1.045. Even the low that was made in about a year later in December of 2015 only went to 1.53. So I'm thinking that the euro has a chance over a period of 3 months or so to start to pull back, to retest the lows, and I think that the dollar will make highs. That's what I'm looking at.
Okay, and then going back to the UUP, if you use that for the dollar, what do you think it's too risky to play a dollar going lower over the next few days?
I would prefer. You know what I prefer is for you to be thinking of, do I want to buy rather than do I want to short? In other words,
that's what I was after. Good.
If I'm looking at the tide, I don't want to play the little short waves. I want to get the nice long wave that I can surf all the way in, and that's the way I'm looking at here. And I would rather say, you know what? I don't want to get trapped. I did that the other day myself, and I'm not going to do that for subscribers. We went the wrong way for something that was absolutely going down, and I said, don't do that. You know the trend. Don't make those silly mistakes.
Sure.
That's amateur hour. I don't want to do that. So I'm saying I think the UUP is going to go higher after a little bit of a pullback.
Right. So I'm looking at the daily 9 EMA, and it's almost there. And would you use that as a reference, or would you use the? I'd use
right. I'd use the daily between 25.36 and 25.28. That's the test. If it makes that test and it's successful, that'll be great. If it doesn't even get there by Friday, that's really positive for the dollar.
Got it. Awesome. Thanks, Basil.
Thank you very much for calling. I appreciate that. Ben in Tallahassee, good questions. Folks, Dow's up 51, and the S&P is up only 0.30. I don't like it when the Dow, the 30 stocks are leading the 500. To me, that's not good action. So now I had a couple of other questions. USO, good question. So that's, I believe that was Sandip. Yeah. So USO is trading right now at 11.19. Down 5 cents. It made a rogue wave peak F. I don't know if I've got the. Yes, I do. In fact, you know what? We've got the break coming up in a minute. It's just enough time to sing my song. It's buy at the low and sell at the high. We used to do this all the time. The market goes up, the market goes down. Supposed to buy at the low and sell at the high. But you know what we tend to do? We buy at the high and we sell at the low. Snap, snap. The Chapman Wave is what you need. You buy with a Stoke and the OMAC deed. Follow the price and wait for a peak. Higher highs is what we seek. The wave goes to A and then to B, even the anticipated C and D. There it is. That's when it flashes a cautionary light. But all you gotta do is make your stops real tight. Suddenly it goes to E and F. There it is, F in the USO. A bell rings so loud it can make you deaf. So what you gonna do, which way to go? You sell at the high. And you buy at the low. That's the Chapman Wave peak F, and that's what it made. I think USO is pulling back. The 200-period exponential moving average at 1143 is the resistance. I think the weekly chart is the one we need to look at. Maybe I'll come back. We'll look at crude oil because it's an important component right here. I'll be back if you survive the singing. Well, we won't call it singing, the croaking. I'll be right back. Basil Chapman. Dow's only up 49 now. S&P's hunch. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yesterday, I wasn't able to do the show, and I had a couple of questions. One was from Ken about JO. Now, maybe it's too late because it was yesterday, but to tell you the truth, I don't think so because what was Basil, would you look at JO for us? Maybe a target price. Thanks. This is in a leg C. This is this the coffee? Yep. This is the iPath Bloomberg Coffee Trust ETN. It's in leg C with a little doji candle. I could give an alternate count, but everything about it says it's a leg C. I do have an alternate count in the weekly, which is F/C. But one of the things that's really important about these monthly charts, when it goes to a C and it's in such a very small, I mean, look at this leg A that went from on 11th of 2019, that was November, at 20.37, it screams in one leg over 1, 2, 3, 4, 5 months, and then double tops at 42.87 in a leg A and fails. So this has gone very methodically to an A, to a B, to a C. And my suspicion is that in a sense, we've got to try to understand whether or not coffee is getting towards the resistance area. Then if I look on the left side, the only resistance I can see is this little peak right back in April of last year at 26.10. Hey, 26.10, I'm sure you'd be willing to take another $1.50 out of this. So I'm just going to make 2 suggestions here. The first is, I don't know if you're long or if you're not. If you are long, stay long coffee. Let's give it 3 days. In fact, let's talk about it again, either Friday or Monday. Just remind me. But stay long at this point. The MACD is good. Stochastics at 87%. The weekly chart, also very nice action. I don't see anything other than maybe a little quick pullback short term, but I think it's going to try again. 24.59 is the high today. And I'm suspecting that this is going to try for right there, 24.77, maybe a touch of 24.90s. I'm thinking 24.77-ish is the area, and then it starts to pull back. I should really look at the 120-minute chart. Oh, look at this. A peak D right now in the 120-minute chart. Yeah, I think it's holding very well. I suspect it's going to go a little higher. So let's leave it at this, that if you don't have, I don't know if I'd have the trade in a leg C to go for a D, unless it pulled back to 24.14, 23.90, then you might nibble and go for that leg D. But if you're in it, I'm saying hold long coffee. I think it's acting very well. Here's the other question was, I think I had a question about the, hope I can find it. When was this? I was just away. Oh, SLV. I think I had a question about the SLV and also about the nugget. I think it was nugget. So SLV's made a peak C. It's just a very small move, and I'm suspecting that the power of the dollar is really strong enough to keep silver lagging. I think it's powerful enough to let gold, although gold is holding very well, I think gold is going to pull back a little further. I think a chunk of the move down from the 1380s area down to the 1340s has been made. Now I think it's just a matter of making some kind of a retest in a U-shaped formation, in an arch formation in the weekly chart. And then I'll look at it, and in my webinar, I am going to be talking about gold. I have some very specific things that I'm talking about in terms of gold. I'm also talking about the dollar. I'm talking about the longer term and how we're going to position portfolios, etc., because I think it is so important at this stage. What could give us the end of this CODA session, CODA phase, going into next year? I am calling it the end. I know there are a lot of people talking about 30. Now all of a sudden 35,000, 50,000 in the Dow, just the start of a big move. I don't see it now. I could see it maybe if certain things happen, but at this particular point, excuse me, I think we're coming into an area that says there could be a containment to the downside. It could take time. And then when we move to the upside next time, it's got to include more people. And I'm going to be talking about what are the differences now. Is this something like in 2000 where the NASDAQ usurped all the energy from the Dow? So the Dow traditionally would have been going screaming up to the 19 or 15,000s instead of stopped at the 12,000. Is this something that we're looking at where there's been a rotation through the different sectors, and that, as in 2005 when real estate made its major top, and then 2007 the general market did, money was so tied up in real estate it just impacted everything. Are we looking now at a combination of things that are happening? And there are other areas of investments that might be usurping money that could be. Is it that the young people really need to get into the markets? There was another group that I was going to talk about. I really want to talk about this, but I'm afraid that I can't, because I've got to be able to articulate in such a way that people don't say, "Oh my God, is that a?" and then think it's a very biased opinion. No, I'm trying to be as mechanical and as objective as possible. I will mention it at some point. I mentioned it back in 2000 to my clients at the time. I mentioned it back in 2007, and it's happening again. I'll be talking about it, but I need to wait for the right time and the right move. Now, if you're looking at this particular chart right here, let me just get this. That's the SPY. If you look at this particular chart right now, oh, that was a mistake. That's the SPY weekly, and the weekly chart shows the technical is very poor, but the price is holding up. So we're going to have to see which is going to win the day. I wanted to go here. Look, this is the green is the SPY, the S&P Spider, the trading vehicle for the S&P. This red is the USO, which is the oil ETF, United States Oil Fund. And look how it spiked up and then it pulled back sharply. And look what happened to the S&P. Spiked up and now it's pulling back. And that's why I said just now, I think we're real close to some kind of a top in the shorter term. And then we'll have to see later in the day. But the trading between the arch formation, the top and the bottom, the top and the bottom, can drive you bonkers. And unless you can very specifically pick up stocks that are doing very well, or very well on the upside or very well on the downside, you're kind of vulnerable. Now, the stock I'm going to check it out now. I haven't looked at it for ages. But when earnings came out the other day, that afternoon, I was going to say to subscribers, let's short this or buy puts. And then I thought, we've got so many positions, I didn't really want to do it, but I'm really upset that I didn't. And it was Athena. And look at Athena after the earnings, it gapped down, and now it's, oh, man. And I gave this as a major monthly sell signal back at Athena Health, ATHN, down 377 at 104.60. Why? Because of these patterns that repeat. This looks, keep your eye on this, and now look at this particular one here. You keep your eye. Remember that pattern right at the top? Right there? That's the gold. That's GLD. They're those arches that failed down. Let me go back again. Let me go, Athena Health. Look at this. So selectively, we're looking at high vulnerability in stocks that were absolutely spectacular at one point, going from the 20s to the 206 level with the Chapman Wave 2-bar reversal back in March of 2014. And now it's plummeting. It's going to test 97.30 very soon. Oh, that's upsetting. Anyway, so patterns repeat over and over and over. Now, I do want to do something here. That there was a question right here. If I can just find it one quick minute. Will I find it? Will I find it? Will I find it? Will I find it? Oh, I don't think I'll find it. Yeah, there's the break. Oh, question on the VIX. Of course, that's a great question. VIX.X. As we go into the break, the VIX is at 13.89. It's up 43 cents. It was much higher. It's pulling back. This is the way you've got some kind of support. I'll talk about the VIX because it's really important when we get back. Basil Chapman, Tiger Technicians Hour. Dow's up 48. S&P is up a whole 18 cents. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Looking at this 2-minute chart of the E-minute. Have a look at this chart, and now have a look at this chart right here. Look at this. Whoops, look at this. Of course, I hit the wrong chart. It's this one right here. Look at that. Hey, don't they look familiar? So patterns repeat, and we'll see what happens. Could extend a little bit longer. Okay, I said I'd look at the volatility index. Look at this. The volatility index is at a point where it's starting to make higher lows but it's still making lower highs. It did go to a peak D. This is the second time it's got a peak D. This is very unusual in the daily to go to these peak Ds in this particular pattern. A lot of the time it takes a lot longer. Look, A, B, C, finally a D, and then it goes fairly quickly, A, B, C, D. The last time was a peak effort at Brexit at 2672 on the 27th of June. And then we plummeted down to 11.02. Historically, the low in the VIX is 9. I checked it out just recently for 9.39 back in December of 2006. So this is going to be a very important moment because we've got just a few days left for the month to finish. And the month so far has not been able to close above the 9-period exponential moving average at about 15.10. And we're at 13.88. Couple of days to go, anything can happen, but right now I'm saying this is very interesting. Month finishes on Monday, so that's it. Okay, now so VIX instrument on the day, if it starts to pull back and it goes to the under 1370, this market will make a slightly higher recovery high today, and it needs to do that and hold all the way through to the close. My thinking is that it's going to be kind of a mixed-ish close. I said to my subscribers this morning to my opening call, I'm thinking there's a mixed close, and we'll see exactly what happens. Now, I had a question about the IBB. One of the reasons why the IBB is stuck, is down at 267, is if you look at the monthly chart, I still have a Chapman wave, and now this really is not an Elliott wave because we've broken so many rules, but it is a Chapman wave, and it says in the Chapman wave CW5, Chapman wave 5, we should break 240.03. sometime in the next couple of months. And if that occurs, then my target has been for a long time right here, the 207.48 low of April of 2014. So it'll be somewhere between 222 and 207 will be my target. That's for the iShares, the NASDAQ Biotech ETF. The upside is very limited. You can have sudden spikes, but that's what I'm looking at. Okay, hope that answers your question, Dan. That was realist. That's kind of what we're looking at. Now, here's another thing that I wanted to do just as we're about to go to the break. In the webinar coming up, a week from tonight, remember tonight's Larry Pesavento should be a great webinar. A week from tonight, I'm doing something that in many ways really puts the Chapman wave on the line. Why? Because I'm suggesting to you that regardless of who wins, the market the Dow should go above 18,668 for leg D. The S&P at some point should go above, and I'm not giving you times. The times I'm going to have more narrowed down by the time we speak next Wednesday. The S&P should go to a leg C above 2193.81. The QQQ series is acting beautifully. It's in a leg B. I don't know. There's no other way I can count it. In a leg B, it should go to a C and a D, and the MACD is just crossing positive, and the stochastics at 94% in the monthly chart. Remember, I'm talking monthly charts now. This is a big deal. Long term, meaning goes into 2017. The IWM, not acting all that well. So this is a leg A, probably a peak A this month. But it is under the major high, so it's a gray A. It's under the 129.10 high, all-time high. I'll have to talk about that in a very different way. So the webinar, I'm going to talk about the TLT. I'm going to talk about the Japanization of our bond yields. Is it done or is there more to come? Hey, have a fantastic rest of the day, and I'll be back tomorrow. Check it out. Check out my opening call. I think you'll find it very useful. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,